I remember when I went to my mom and I told her, I was like, I'm going to be on CNBC. And then like a typical mom, she's like, shakal dekhi hai. And I was like...
God, my mom didn't ask me that. People tell me I have a face for podcasts, but anyway, go on.
Nirmal Bang were actually advertisers on our channel, Anupam. I don't know if you remember. But there used to be this ad that Nimrat Kaur had done, way back. And I think it was her first modeling assignment, so to speak. Of course, she went on to achieve a lot more fame through Lunchbox and other movies. But they were advertisers on our channel back then. And... it was just another random conversation that started, and they're like, would you consider doing this? And then I picked up the phone, spoke to some friends in the industry. I was like, ye kaise karte hain?
Let's say a 25 young guy comes up to you and says, Rahul, I want a portfolio for the next 20, 30, 40 years.
One of my pet stocks that I really like, and, I am an occasional consumer, is McDonald's. Right, I think I love what they've done with the business here. The fact that they're only present in half of India and their metrics are still better than a lot of their competitors that are present in all of India is quite remarkable. If you do have the return of Bollywood, which is something that everyone's been waiting for, then there is only one name to play, which is PVR. I think unfortunately for Bollywood, nothing from Akshay Kumar to Amitabh Bachchan is working at the box office. Yeah, and I think if that revives, then you could have that being a fairly interesting theme. I think HDFC Life has done really well. Max Life, SBI Life, ICICI Prudential Life. I mean, you could go into any of them. So these are, you're never going to catch the top and the bottom in a stock. Even an institutional shareholder will always buy the stock like 15-20% off the bottom and sell after the stock is corrected 20%. There is no way. We are all human beings at the end of the day. In the end, we're all shadows and dust. We're all gone in the long run, right? So when you ask for stocks in for 20-30 years, like कोई सुन रहा है तो हम शायद alive ही नहीं होंगे, वो हमें पकड़ भी नहीं सकेगा. So in the long run, we're all dead.
Yeah.
So enjoy life. Yeah. I mean, go out there, have a drink, make merry, live in the moment.
Rahul, welcome to Paisa Vaisa. Thank you so much for doing this, man.
Thank you for having me, Anupam. It's always a pleasure. It's been a while.
My God, we've shifted roles, yeah. What, 15 years ago, Okay, so folks, just for people who don't know, I and Rahul used to work in a TV channel. Can you beat that? 2008, 2009, I was a consulting editor at UTVI. Rahul was the markets editor at UTVI back in... Is there any video clip also of that? कहीं कुछ रखा पड़ा है कुछ कि नहीं है?
Honestly, I haven't even surfed. But it's always pertinent to mention that it eventually became Bloomberg UTV.
Yeah. Yeah, folks, I was in front of a camera. Of course, Rahul is much more photogenic than I am. Still is, by the way. It's good to have you here, man. Thank you for doing this for listeners.
Well, thank you for having me. I think we've been speaking about it for a while, but I'm glad we were able to put it to fruition.
Yeah. And, before I get into the whole market stuff and all that, which, of course, you've been doing now for a long... How long has it been for at Nirmal Bang?
12 years and some.
Oh, boy. So you've seen enough, you've seen your share of bull markets and bear markets.
Absolutely.
Kya baat hai. Good, yeah. So before we go into, that, I want to talk about... So Rahul is someone who was part of the financial media for quite a while. He was there in CNBC, he was there in UTVI before you shifted on the other side of the table. You just tell us about, and of course your background, because I don't know whether when you were in college or your MBA, wherever that you decided that you'll be leading one of India's brokerages. Let's talk about your journey, and then we'll talk about shifting sides.
So there's a beautiful book written by Burton Malkiel called A Random Walk Down Wall Street, and I think that's something like my career has been something like that. I think it's been extremely random. There's been no correlation if you start off from my undergraduate days. I'm basically a student of economics. Started my career in India in PwC in corporate finance, then moved on to investment banking in UBS. And that's, media happened predominantly by chance. Not like the other two were scripted, but this was really by chance. It was like, I remember when I went to my mom and I told her, I was like, I'm going to be on CNBC. And then like a typical mom, she's like, shakal dekhi hai. And I was like...
God, my mom didn't ask me that. People tell me I have a face for podcasts, but anyway, go on.
So, it was kind of, I think the family was a bit taken aback that I was going to be leaving UBS and investment banking to be doing this. But I think in hindsight, it was a very good decision. I think then, as you rightly said, Bloomberg UTV happened, what was UTVI. And I think that was a very, very good stepping stone. I think while CNBC was a defining moment in my career, I think the first leadership role, so to speak, came in at Bloomberg UTV, where at least during the markets band, which was defined as, say, between 8 to 4, that came under directly my leadership in terms of content and pretty much the entire support system. So I think that was a very, very big learning curve for me. Nirmal Bang were actually advertisers on our channel, Anupam. I don't know if you remember, but there used to be this ad that Nimrat Kaur had done, way back. And I think it was her first modeling assignment, so to speak. Of course, she went on to achieve a lot more fame through Lunchbox and other movies, but they were advertisers on our channel back then. And, it was just another random conversation that started, and they're like, would you consider doing this? And then I picked up the phone, spoke to some friends in the industry. I was like, ye kaise karte hain? Yeah. So they were like, this is what you need. I was like, raw material to hai, ab log chahiye. So that's literally how it started. It was just an accident, and it's been a series of accidents. And 12 years on into the same profession, here I am.
I'm sure you're being humble, because running a institutional equities product, I know because I've worked in that field for a long while. Running that for 12 years does take some amount of capability. So I'm sure you're on to something out there. Rahul, when you say that you started, I don't know, in 2005 at CNBC, and here we are in 2023, that's about 18 odd years. So you've seen your share of ups and downs. I remember our days at UTVI when we had covered, of course, Bloomberg UTV. Let's just stick with that. We were there during the global financial crisis, right? I think somewhere you would have, I don't know where you were in 2013, but you would have been at Nirmal Bang at that point of time. You had the temper tantrum and Indian markets had fallen, and then you had COVID.
Absolutely.
So you've seen your share of all these major things. When you look at today going forward, brokerages, I want to talk about the brokerage product, because these moments kind of define it. How have they evolved in the last, 10, 15 years? And what do you think they're going to be going forward? And I'm talking about the institutional part. Of course, feel free to put in a retail part also, because Zerodha, I think, has completely transformed retail. Okay, so let's talk about both, your opinion on both these pieces of the brokerage pie. And what's your view on that?
So I think, Anupam, I started my career in India in 2003, which a lot of people consider as the start of probably the longest bull market that India had when I joined PwC. And by the time I joined Bloomberg UTV, that bull market was about ending, so that entire 5 years. I think the one fundamental shift, Anupam, that's happened over the last 15, 17 years is that the cycles for bull and bear markets have got a lot more protracted. I don't know if in our lifetime we'll ever have 5 years of that bull market ever again. And just a case in point, since you mentioned COVID, you'd remember the Nifty dropped down to 7,500, and within 15 months it was at 18.5. These things are not some things that, you cannot script these things. They just happen. And of course, in percentage terms, it looks obscene. And so also when the fall happened from 12.5 to 7.5. So I think the cycles have gotten shorter. Which means that people are taking much larger bets in a lot more protracted period of time. While optically this is very good for our business because we are intermediaries, I think there are few things that are changing at the margin. One is, of course, I think regulation has become extremely important in this field. And I remember when we got empaneled with a lot of our institutional clients, they used to pay us 20, 25 basis points per transaction. And, one fine day you had a notification coming in from the regulator that 12 basis points is the cap. And I think, Anupam, we may actually be the last homegrown institutional equity shop to set up in India and grow. I could be wrong, but I don't think there are too many others. I think, there was an Ambit and a Spark that set up just before us, and they've done remarkably well for themselves. But I think we were probably the last kid on the block, so to speak, that was neither acquired nor has gotten acquired and has sort of grown in a fairly organic way. And we're fairly proud of what we've achieved over that period of time. The other, of course, Anupam, is I think the advent of technology. Right. And for a lot of your listeners, who were, looking at automation coming into different aspects of businesses, I think something in our profession called direct market access, right? DMA, where if I'm an institutional client, I have to provide my institutional client that platform where he or she can execute a trade, and I just get a notification that my system is being used, but I don't know what they're trading on that particular platform. So that removes a lot of compliance headaches from them, issues that have crept up in our industry over the last 1 year with respect to, front running or insider trading or whatever it is, right? So I think DMA sort of takes that out. Obviously, there is a side effect that, this could have an impact on jobs. right? So if you're putting in DMA, what do you do with dealers? And then I'm not saying that the entire market has moved towards DMA just yet, but I think that that's the future.
Sure.
When you talk about retail broking, obviously the advent of Zerodha has been very, very interesting. I think COVID in many ways was a seminal turning point, so to speak, for the retail broking industry. A lot of people sat home with nothing to do. For us, markets were on, and thankfully, our salaries kept coming. But for a lot of people in manufacturing or other services who were just sitting at home doing nothing, landed up opening demat accounts, and this became the go-to. You would remember, Anupam, when demonetization happened, the size of the mutual fund industry in India was 5 lakh crores. Today, that number is close to 40 lakh crores. Yeah. Right. So in almost 5 or 6 years, you've had the industry grow about 8-fold. And that's a lot of these new generation participants who've come in, and they're predominantly in their mid to young, I'd say probably between 22 to 26, 27. So the average age of investing has also come down. So I think there's a huge scope for players like Zerodha and the likes to be, doing what they're doing. And I think this is just imploding. I think the financialization of savings in India has just begun. People are actually moving away from assets like gold and real estate into equities. And, who's to say whether this 40 lakh crores or whatever that number is, 37, 38 lakh crores is 5 years down the line. I don't think we envisage being where it is today. So I think there are technological changes that have happened. There's an entire new plethora of investors. The timelines for investing, the frequency of trading, automation, a job impact. I think there are so many of these things that I've tried to cover, but, these are just certain things that are coming to mind on the way the industry is evolving.
Rahul, let's get to the bread and butter, of your business, so to say. I wanted to talk about the economy first, okay? Then we'll move to the markets, because you've always had this. I know that Nirmal Bank does a lot of interesting research also, some of it on the ground, about how the economy is doing overall, okay? Let's talk about that before we go into the market. What do you think is happening? Red flags or anything?
So I think, Anupam, it's evolved over the last 20 years. I think the one thing that stayed consistent from the time I started looking at Indian capital markets is successive governments have spoken about taking manufacturing as a percentage of GDP to 25%, right? And this may have been even prior to when I joined the capital markets, but it's been something that's been spoken about, and it seems like there is a lot more catalyst to it under the current establishment. But I think while that is a very significant and a tectonic shift from a jobs perspective as well, I think that is something that is probably going to take time. It's still a services-driven economy, and we were just talking about entrepreneurship a little while back, and it still seems like it's predominantly a services-oriented economy, and it probably will stay that. I think, Anupam, the one thing that is visibly different from, say, about 5 years back, and this holds true for a little bit longer period as well, but the commentary has changed over the last 1 year, is India was always a mass market economy. I have heard promoters, investors, everyone talk about premiumization now. It's almost like the mass segment doesn't even matter. You've had people, in mass retail, for example, that have gone ahead and made acquisitions of slightly premium products. Real estate developers are, saying, "Theek hai, ye maal nahi bik raha." Eventually it's priced into volume, into anything. They're selling premium. A lot of consumer staples companies are now talking about premiumization as a percentage of their portfolio. Look at what's happening to hotel rates, cars, aviation rates. Yeah. So I think when people are looking at the Indian economy right now, I think this entire K-shaped recovery that was being spoken about seems to be there for real, because there is, at least for the short to medium term, there seems to be genuine distress in rural India, and that's showing up in corporate earnings and the likes. And it's probably just not a feature in India, Anupam. It's probably globally. You've looked at autos. Just this morning, on my way here, I read that Bajaj Auto is looking to cut its production by almost 25% for its export market.
Heard that for a long time.
And the stock was down about 5% in my drive up here, and I was seeing. So it's probably something that's happening across the world, where I think the stock market effect has made the people who entered a lot wealthier. I still think, all things considered, I mean, India is not on a bad wicket. We're always going to outperform. But I think it's always good at any point in life to have measured optimism. I think there's no point in having unabashed optimism, because at any point in time, you're going to have some challenges or the other that are going to be at the horizon. So you can never say India is just an out-and-out structural bull market. Those are very good for TV catch lines. There will always be concerns at the margin, right? So you spoke about the taper tantrum, right? the government of India took a lot of bold steps, if you can call it that, in that period of 2016, 17, 18 as well. You had demonetization,
GST.
you had RERA, you had GST, you had the IBC, NCLT, all of that. Right. So just imagine none of that would have happened. You would have probably gone into COVID a lot stronger, and you wouldn't be talking about a 5-6% GDP growth today. You'd still be talking about an 8-9% GDP growth. But the fact is that those measures were taken. Some of those were necessary and necessitated, and they were taken. I think, Anupam, if I look at the next 10 years, I think if we are able to compound at 6-7%, we'll be okay. I think maybe 10-12% maybe in real GDP terms, maybe a bit of a stretch, according to me. We are still a very, very agrarian economy as we speak. And, in a couple of months, we'll start looking up to the clouds again and seeing, monsoon kaisa lag raha hai. And I think the fact global warming seems to be a reality, Anupam. I think, the kind of weather we're facing in Bombay in February is, as per the Met Department, is 7 degrees higher. So if these things are here to stay, there's going to be a crop impact. There's going to be an impact on rural India. And these may not be cyclical in nature. They may actually end up being a slightly more structural theme. So you may have situations where people from the villages may actually have to start moving into the cities to work. The Chinaization, if you want to call it, of the economy, so to speak. So I'm not bearish. I'm not overtly bullish. I'm measuredly optimistic. I think when we look at, say, the next 1 year, we are in a pre-election year. And, the formula for GDP is consumption plus investment plus government expenditure plus exports minus imports. I think if you look at the world going into a slowdown/recession, because of the economic impact of the rising interest rates, it's going to have a bearing on your exports, and you may not even be able to import as much as you want if globally capacities are getting reduced. So I don't think the X and M is in your control. I think there is going to become a time where this wealth effect that people saved because of COVID is going to wane. So you're going to predominantly be down to investments plus government spending, and I think the union budget was a roadmap in that direction, where they've spoken about increasing capital expenditure by 33% and hoping that private sector follows. So keeping those two as the vehicles for the economy, I think India should be able to grow at 6% plus minus a little bit here or there. Again, like I said, in that there'll be enough and more opportunities from a stock market perspective to make money. But there's no need to be overtly bearish, but at the same time, there's no need to be overtly bullish, saying that, the sky is pink and let's go for it, kind of a thing.
Stock markets, okay, because we peaked to what? I think somewhere in October of last year, around about Diwali. I think we were at, 18,900 on the Nifty, I think. And we're just 8% off that. That's it. We are below 18,000. You're at whatever, 17 XYZ, whatever number that is. I haven't seen this bearishness for a long time. Some stocks are off 30%, 40%, 50%. Then, of course, you had that great bomb falling on a certain sector, or certain groups, shall we say, in, I think, third week of Jan is when it came in. And I think you've also looked at markets long enough. I don't think any one particular group has seen market cap wiped off at this level. Okay. What's your view on the stock markets, Rahul, now and going forward?
So I think, Anupam, first on this most recent episode that you picked up, I think the markets today are far wider and deeper than just one group or one entity alone. If that were not to be the case, then the Nifty would have probably already been at 15,000. I think the fact that it's held up, that group may be dealing with whatever they are, but I think to a large level, the markets have moved on and looking to find value in stocks, as you rightly said, that have corrected 30-40%. The challenge currently, Anupam, in the system is that volumes have dried up dramatically, and especially from the institutional side, churns are down dramatically. I think if you look at retail volumes, right, and this can typically happen in a market that's going nowhere. For the longest time, the Nifty has been in a range of 17,500 to about 18,200, 18,300. There's no news flow to break it on the way up. There's no news flow to break it on the way down. The only disconcerting data point that has probably emerged over the last, say, 1 week or so, or two rather, if you can. One is that the US Fed seems like it's going to go higher for longer on rates, and that may force the Reserve Bank of India to do the same. And the second is what's happened in Russia and Ukraine, with the US president making an unexpected visit to Ukraine, and then Putin addressing the HNI community, dissolving the last arms treaty that we had with the United States. So the data points are old, but what form they take in terms of a refresh, we don't know. And if they do get refreshed, they can't be refreshed on the positive for sure. So I think if anything, from a stock market perspective, the risks are more, perhaps at current levels, more to the downside than they are to the upside. We start off every financial year saying, yes, our earnings 20% grow honge. And by the end of the year, those are always tempered. And you've been in the markets longer than me to know that that pretty much turns out. We have a job to do. I think sell side has they have to get brokerage and they have a market to sell. And I think you need to be honest to yourself. And there's no point just doing things for the sake of doing them. That being said, I think money opportunities will still be there. I think even at 7,500 Nifty, stocks were expensive. And even at a 17,500 Nifty, there are stocks that are cheap. You just need to, go back to what we were discussing 5 minutes back. If you look at the market from a government spending perspective, look at where the government is going to spend. They're going to spend on roads, ports, there are enough listed players there. What is going to be required to make these things, right? You're going to need cement or whatever, right? If it generates employment, it will probably be good for a third order derivative in terms of consumption at that level. So I think if you just, use common sense and approach the markets, I think there is still money to be made. But let's not fool ourselves to say that we're heading back to 19 or 20. We will. It's just the nature of the markets. The Nifty will even be at 25,000 someday, even 30,000 someday. But is that going to happen in a hurry? I don't think that's the case because, like I said, I think there are data points on the horizon which are a little skeptical at this point in time, which refrains me from taking an ultra bullish view, so to speak, on the markets at this point.
Let's talk about sectors because I know that you can. You're free enough to do that. Sectors or stocks, whatever. Let's talk about stuff that you find interesting, both this side, that side, whichever. I mean, I don't think we would have. If you roll back to end of December, and anybody who was taking an outlook for the year 2023. I mean, that some kind of sectoral wipeouts have been surprising. Okay, when you're talking about capex and infra, I don't think there are real estate stocks at 52-week lows. Okay, people have suddenly lost interest in that sector. I have no idea. I don't know what the damage is at the index level. IT I can still understand. People will say that there are some drivers out there. So let's talk about your view on sectors.
So I think, Anupam, the one thing that has visibly changed, say, from the October to December period to, say, where we are right now, is if you looked at any strategy report in India or overseas, they all spoke about the first half of this year going to be very challenging and the second half of the year being a lot better. They actually felt that the recessionary environment would probably persist or the slowdown environment would persist in the first half. My sense is with this rates higher for longer, that trade actually might be getting reversed. We may actually be in for a period where you don't have such a bad first half, but the second half becomes far more challenging going into 2024. In that backdrop, I think export-related sectors could be a bit of a question mark, particularly, say, for example, IT services, right? I think the total contract value or the order book in simple terms for the IT companies has been remarkable. But, at times when economies are slowing down and people are relooking their budgets, I'm not saying that those contracts are going to get cancelled or taken back, but you can always tell your vendor that, we'll push this back by 6 months to a year. And to that extent, obviously, it factors into what kind of revenue growth and guidance you give in. Add to that, of course, you had this issue of moonlighting not too long back. And I think that's probably going to put a slightly upward pressure on wages. So if you were hiking wages by, say, 7-8%, that probably goes up to 9-10-11%. And so if you have a situation where your top line's coming down and your costs are going up, there'll probably be a margin impact there. So I think from an export perspective, we'll probably be a little cautious on IT right now. Our tilt will probably be more towards domestic. And like I said, I think, if you look at the allocation of the government and the kind of capital expenditure they've announced, is predominantly going to go into roads. Right, and I think that's one sector we're very, very bullish on. Unfortunately, there are not too many large market cap companies in India that are roads or even infrastructure players. You have Larsen, which is the motherboard of it all, and then you literally drop down to maybe 1/10 the market cap to find the next stock, and that's just the dichotomy of the Indian capital markets. But I think the first is, what are you going to make? And I think roads is one sector that we think will do really well. We like cement as a sector a lot, Anupam. I think if you go back historically and see the kind of cement growth that happens in the run-up to a general election, those numbers vary between 5 to 10%. In some years it was 5, 6, 7. In some years it was 9, 10%. But even if you work with a 7, 8% kind of volume growth for the cement sector and you have commodity prices that are going to likely come down, you have a situation where EBITDA per metric tons could go up to fairly respectable levels. I think consolidation will probably take a little bit of a backseat for the short term. I think you've had one large acquisition that is probably still getting absorbed in the system. So I think cement could be one that looks good. And the other, Anupam, I think when COVID started, if you remember, the entire trade had moved to chemicals, right?
Oh, yeah.
China plus one,
Specialty.
right?
Yeah.
It was like you woke up every day and you just threw a dart and you're like, chalo, ye chemical company le lete hain. It had a very good run for the first 6-8 months, but then it's consolidated time and price wise. I think some of those names are now looking fairly interesting to us. I think for quite a few of them, either the capital intensity is coming down or has stopped because the capacities are coming on stream this year or next year. And you could see a very big uptick in the return on capital employed of these companies. So I think a lot of that money that came in and has sort of got tested, I think that could be an interesting theme that comes in. And like I said, I think anything premium, Anupam, I think it's still, I think it's not that concept of buy at any price, but I still think there is value. I think in certain quick service restaurants in India, right? A McDonald's for a case in point, which is the listed entity is only half of India, but they're doing a lot of remarkable things. So I think there is still value in some consumer discretionary roads, cement. And I think as an absolute last order beneficiary, if everything goes right, I think maybe 6 months from now, if you have a good monsoon, consumer staples probably makes a comeback. I think that's probably the way I would structure my portfolio, and maybe even mass market two-wheelers at that point in time.
Yeah. Talk about 30-40% of the market is just all in one sector, crammed up in that massive, banks and
absolutely
NBFCs. What do you think about that?
So I think, Anupam, the good part is that, when you went back to say, when we were coming out of media, there was a lot of these groups that were potential NPAs, right? And if we start discussing, it'll probably take another hour
episode, another episode.
Exactly.
Yeah.
So today you don't have that kind of corporate NPA that's been spoken about, which is a remarkable thing. I think most banks are over-provided for. NPAs are all right. Cost-to-income ratios are okay. The retailization of a lot of banks that were corporatized has happened to a very large extent. I think the only 2 or 3 things that could derail banks, in my view, is that even today, if you see, one of the biggest challenges for banks is deposit growth. Right, credit growth is fine, and you're seeing that in the CD ratio, credit deposit ratios for most banks. So I think if rates for banks have to stay higher, and I think for senior citizens it's probably already hit 8% on fixed deposit rates. For maybe people in our income age group, it's probably 7.25, maybe even 7.5 in some cases. So if they probably stay higher for longer, there could be a slight impact on the net interest margins of banks. Add to that, if you probably have a situation where your real GDP growth is say 5 to 6% and your inflation is about say 5.5%, you're probably looking at a 10-11% kind of nominal GDP growth. So if your credit growth, which has been 16-18%, drops down to say 11-12-13%, and then you have NIMs becoming an issue, that could be probably the only risk I see to banks. I'm not in that camp that is really too concerned about retail NPAs yet. I know there are job losses happening in many parts of the world, especially in the tech sector. To that extent, we haven't seen that in India yet. So I don't want to take a call that, there are going to be very large rises in NPAs. But yes, you'll have to ascribe valuations to banks today, keeping in mind that there could be a tapering off of credit growth and some impact on net interest margins. That being said, there is still enough and more opportunity out there. I know people will be a little wary of public sector banks because of certain exposures that they've probably taken. But even there, they're not very large exposures as a percentage of the book. But sometimes it's just a mindset issue. It's so I think, it's like having a chocolate, right? I mean, one chocolate or two in a week is not going to do you harm. But if you just take a call that sweets are bad, you're never going to touch them.
Let's say a 25 young guy comes up to you and says, Rahul, I want a portfolio for the next 20, 30, 40 years of 10. Let's take out the sell side, hat for a minute and talk about conviction. What they say in the markets, that I'm sure that you've had a lot of that. What would be, whatever, top 5, top 10, 3, whatever number of, I think, your real high conviction bets in India as far as stocks are concerned?
On a lighter note, Anupam, I don't think even a fund manager has that kind of view. I'd be surprised if they have a 6-month view. And but that's on a lighter
being
note.
Very candid. As I don't think fund managers talk like that.
No, that's all right. I think like I said, it's best to be a straight shooter, and I don't blame them. I think if you look at the fund management industry today, I think there is a very large portion of their CTC that is locked into their own funds. So the pressure on performance performance is extremely high. So if that means you have to churn, you have to churn. You basically have to beat the benchmark. You have to give the returns. I don't think anyone in India takes a 20-year call. If you're taking a 20-year call, then it's very simple. You just keep buying, the same thing that our parents bought. You buy HDFC Bank, TCS, Hindustan Lever.
Chalo, 1 year, chalo. Let's go for something easier.
So, like I said, Anupam, earlier in our chat, I think there are businesses that are emerging. Right? Now, can those disruptors themselves be disrupted is the call to take. And if not, then how big can these entities potentially become? Right? In some cases, there are businesses that exist that could become another version of themselves. And I go back to a CFA conference that we had sponsored a few years back, and Rukshat Shroff of JP Morgan, he's obviously now retired from there. Somebody asked him a question as to which is the next HDFC Bank, and he said HDFC Bank is the next HDFC Bank. And that line became fairly popular. And that holds true for so many companies in India, that company can potentially be the next company because the size. So let me give you a case in point, Anupam. No consumer discretionary company in India, whether you look at hotels, multiplexes, QSR, footwear, none of these has even $1 billion of top line. None of them.
Are you serious?
Yeah. I mean, no hotel company, no multiplex company, no QSR company, no footwear company, no value retail company.
You're talking about revenues?
Absolutely. None of them have even $1 billion of top line. A Bata, Jubilant, Foodworks, Indian Hotels, none of them.
And Surf became a $1 billion revenue brand some time ago.
That's obviously a part of a much larger entity which has a 60,000 crore. Exactly.
That's the dichotomy.
Exactly. So I think that the room to grow is immense in India, right? And I look at those kind of stories that could become really, really big.
Sure.
Yeah. So, one of my pet stocks that I really like, and, I am an occasional consumer, is McDonald's. Right. I think I love what they've done with the business here. The fact that they're only present in half of India and their metrics are still better than a lot of their competitors that are present in all of India is quite remarkable. I think this can potentially end up becoming
listed stock is Westlife.
Westlife Food World. Yeah. They're only at about 350 stores in West and South. I mean, this number could be anything just in West and South. We're sitting in Khar right now. Are you aware that BKC, which is just across the bridge from us, doesn't have a single McDonald's? They had one and it was shut down.
Yeah, and it shut down.
So just imagine the scope that there is to come up with something like that. I think that looks like one interesting long-term theme to us. I think if you look at chemicals again as a theme, I think a lot of what's happening in chemicals, Anupam, is fluorination. I think a lot of companies are going into fluorine. And I think SRF could be a very, very interesting name there. Okay. I think, basis our numbers over the next 2-3 years, we think earnings and operating profit could compound at somewhere between 20 to 25%. Nice. It's an industry leader coming to you at fairly inexpensive valuations on our numbers at about 21 times, on I'd say average of 24, 25. If I roll over to 25, it'll look even cheaper in its entirety. I think that looks like, one interesting name.
Sure.
If you do have the return of Bollywood, which is something that everyone's been waiting for, then there is only one name to play, which is PVR. That could be a very good name to play structurally. If you do have, of course, there are challenges on content. Through COVID, OTT has emerged with very strong content. Last year was pretty much dependent on South India and South Indian content. So I think, unfortunately for Bollywood, nothing from Akshay Kumar to Amitabh Bachchan is working at the box office. Yeah, and I think if that revives, then you could have that being a fairly interesting theme. We were talking about roads a little earlier. You could look at a name like PNC Construction. I think basically anywhere where you have order book to bid ratios in these companies which are 2.5 to 3x, where cash flows are decent, balance sheets are not too over leveraged, and you've not heard anything hanky-panky on the promoter, because governance is a very, very important part of these businesses. I think that could be potentially an interesting name. And like I said, I think insurance is a space that I really, really like. I mean, you can pretty much throw a dart. I think all four are equally good. I think HDFC Life has done really well. Max Life, SBI Life, ICICI Prudential Life. I mean, you could go into any of them. So these are just certain names that are sort of coming up in my mind right now. Like we said, India is still very agricultural dependent. You could look at some agro commodities plays as well, like a Sumitomo Chemicals or a PI Industries. I mean, we could literally make a portfolio. Now, to the youngster, if Zomato and Paytm can become much bigger than they are today, or a Nykaa, there is going to be competitive intensity, Anupam. You have RBI coming in with their digital currencies. You have India that's just on a UPI, an agreement with Singapore. You have Reliance talking about getting into the beauty and wellness space. There is going to be increased competition, right? Wherever there is malai, the bigger ones are going to get in and try to take a piece of it, right? So I think the good part for a lot of these businesses, they have a very large moat in terms of being a first mover advantage and having built up their roster. Their consumers are with them. If the disruptors don't get disrupted, these guys could land up being anything 10, 15 years from now. The only thing, Anupam, from a capital market standpoint is since you mentioned taper tantrum, when liquidity is in withdrawal, people go back to looking at return on equity and capital employed. When things are good, then it's okay to talk, gross merchandise value, price to sales, road to profitability and all of that. But there are a lot of these new gen companies which will probably resonate a lot more with the youth. These could become huge businesses, according to me. But the caveat being that the disruptor does not get disrupted. But for the moment, I think there are enough and more opportunities available.
Yeah, so I'm going to just recap that for the listeners. There were 5 very clear ones that came in. The first was Westlife, okay, which is McDonald's. Second was SRF, Specialty Chemicals. Third was PNC Infra, right? Which is roads. That's 3. Fourth, Rahul said, I think was PVR, of course. Who wouldn't, PVR? How is Mr. Bijli doing? When you meet him, is he, really bullish down that COVID is over and stuff like that?
Extremely. I think if you meet both Siddharth and him, Siddharth, of course, from Inox, Siddharth Jain, I think they're both extremely very bullish. The interesting part is that together they are both a minority shareholder in the entity. I think together they hold about 29%. I think one of the entities holds 15, 16, the other holds about 12, 13%. That's the only caveat. Can there be a bigger player that comes in and acquires them down the line? I don't know, but they sound extremely bullish.
It's a tough business.
It's a tough business. Content is not in your hand, right? I think
you're a distributor. So you're an exhibitor.
Absolutely.
The fifth was any of the insurance listed players. I think there's HDFC Life, there's SBI Life, there is ICICI Lombard, there is maybe a few more. Those are the 5 very clear ones that Rahul said. I think agri commodity play. Some like PI Industries. That was the 6th one. And the 7th one, the most interesting one, of course, for those who have that, how's the Josh high, sir, kind of stuff.
Jigra, as you say.
Punjabi, are the Zomatos and the Nykas and the Paytms. If one of them 10 years later actually, it's zero or it's go for broke or it's like gone completely. If they make it, then I think they'll just be massive.
Yeah, because look at the stock prices, right, Anupam? I think most of them are down to a 4th or a 5th of their life highs. That does not mean that they have to go back there. You mentioned a little earlier about real estate. I think the life high of DLF, if I'm not mistaken, was 1,400 rupees. And that happened
2008,
exactly,
that?
right? So it's not necessarily just because it's hit there, it needs to go back there. But can these stocks go up 2x, 3x? Maybe, but it doesn't mean that they have to go back to where they came from. But that itself sometimes, I think sometimes what happens, Anupam, is people get too caught up. I think, the WhatsApp generation gets too caught up. Kuch de do jo double ho jaye. That mindset needs to sort of go away. It's not going to be an easy market. It's going to be very challenging, and not just this year. I think every year is going to be very, very challenging from here on, because like we discussed, Anupam, I don't think in our lifetime we're going to see a 5-year bull market ever again. It's going to test your blood pressure. It's going to test your stress levels. You've got to be very nimble-footed in terms of, how you approach the market. But there's going to be opportunity and more. One advice to your listeners, Anupam, you're never going to catch the top and the bottom in a stock. Even an institutional shareholder will always buy the stock like 15-20% off the bottom and sell after the stock is corrected 20%. There is no way. We are all human beings at the end of the day. The fund manager or anybody else is not, there is not any more. Obviously, they are more well informed because they're meeting managements and all of that. But at an aggregate level, the intellect level is the same across, right? The information is by and large the same. So it's not like anyone is God's gift to mankind and knows something that somebody else doesn't, right? So I think to that extent, you need to be a little careful on the fact that you have to be nimble-footed and don't take a blanket call on, where you think things are going to go, either too much on the positive or too much on the negative. I think excesses on any side are bad. Just play the moment, play the ball, as Dravid used to say. Be in the moment.
Man, it's always good to have a sobered, grounded and a very, humble way of looking at markets long term. I think that's what age does to you, probably.
I don't know about age, but,
wisdom, experience.
So I'll tell you, I think, Anupam, there's been, just at a personal level, right? I lost my nani in 2016, and then I lost my dad in 2018. I practically lost myself last year.
You told me about
There have been,
rough.
experiences that humble you, that teach you that, there is a much bigger life out there than beyond what our profession is, and if you permit me, I can actually
Go
tell
for
you
it,
a
go for
shairi
it.
in Hindi.
Arre, kya baat
It's
hai yaar. Come on, yeah,
it's
go
something
for it.
that I live by. It's written by, a shair who's by the name of Bashar. And recently I've even heard Gaur Gopal Das quote him in some of his sermons. It basically goes something like, उन्हें कामयाबी में सुकून नजर आई तो वो दौड़ते चले गए. उन्हें कामयाबी में सुकून नजर आई तो वो दौड़ते चले गए. हमें सुकून में कामयाबी नजर आई तो हम ठहर गए.
Man.
जिंदगी की दौड़ में ऐ बशर तू क्या कर रहा है, इतना तो तू जी भी नहीं रहा जितना तू मर रहा है.
Wow.
So I think you need to be in the moment. You need to, always reflect on wherever you have come in life. I think everyone is at a particular position because they are meant to be there. Put in your hard work, do the best. Don't compete with other people. I always tell my team and, my friends, just aim to be the best version of yourself. In a very paradoxical way, what Rancho says in Three Idiots, right? Strive for excellence. Success jhak maar ke piche aayegi. That was his exact dialogue in Three Idiots. And I think that's just the way to live life. I think aim to be the best version of yourself. Be compassionate. Don't think you're superior, especially in the stock market, to anyone. I think if you just keep the basics in place, without letting emotions sway you dramatically at either ends, you'll be fine. There's a lot to enjoy in life.
Man, how about that? I didn't expect that kind of wisdom to come at the end of the show, going into, with the sell side, with someone who's an institutional brokerage. But okay, thanks for those insights, man. They are useful. All jokes apart, and I'm really sorry to hear whatever you've been through in the last, and I really hope it's the end of everything that you've seen. These kind of things can
but
and,
you've got to take them smiling, as Russell Crowe said in the movie Gladiator. In the end, we're all shadows and dust. We're all gone in the long run, right? So when you ask for stocks in for 20-30 years, अगर कोई सुन रहा है तो हम शायद alive भी नहीं होंगे, वो हमें पकड़ भी नहीं सकेगा. So in the long run, we're all dead.
Yeah.
So enjoy life. Yeah. I mean, go out there, have a drink, make merry. Live in the moment.
I know that you enjoy your movies, you enjoy your drinks also, I'm sure. Anything that you've been seeing that's interesting, or even a book. I usually do, my last question is always on content recommendations for our listeners, just whatever. Let's not stick to, finance or whatever, anything good that you're seeing or whatever it is.
So 2 books that I'm currently reading concurrently. One is of my idol who I have literally worshipped for the better part of the last 14 years of my life. And even though I have never met him, I have just learned so much from following him, is Novak Djokovic. And I'm reading a lot about him and his childhood and how he grew up in Serbia, the fitness training and, the mindset. I think it's a remarkable book to be reading on him. The other is our homegrown global leader on Indira Nui, My Life in Full. I think it's remarkable to read her journey from a young girl in Chennai to how she, got into matrimony, had children, balanced her work life, the job changes that she has taken. So I think those are a couple of books that I'm reading about 2 fascinating personalities who have aced it in their own respective professions. And I'm very glad you brought that up, Anupam.
But wow, that's so much we spoke about here, Rahul. Thank you so much. Folks, that is a wrap on this episode of Paisa Vaisa. My guest, Rahul Arora. Rahul, it's great to have you here on the show, and I hope you come back, maybe sometime later. Drop into the studio. This was really good.
An absolute pleasure, Anupam. Whenever you call. Thank you so much for having me.
IVM